G'day everyone, welcome back to Pete's Investing. This is June 1st, 2023. We've got the Aussie New Zealand currency update. So I've got here it's just broken up from a bearish signal on our weekly chart, but you'll notice here as well, it is forming this wedge between these two diagonal ascending and descending lines. So it's currently resting on the upper line and possibly going to break through that. We can see there's a slight movement to the upside on the CCI, which is causing this, and the moving averages of the price chart, which is causing this neutral positioning, breaking up from a bearish signal recently. So this week it's neutral. On the daily, the same conditions can be seen, but also we've got this support down here at 104.71 and a key resistance up here at 11081. Now you can see there it's sticking its head up just above that descending line, although that could be just a little false break, but we're not confident of that yet. What we need to look at is a couple of key things. So number one is that diagonal line, but also this Fibonacci. You can see there it's broken up through the 61%, and that's always an area to look out for. When it breaks above that, it generally is a sign of reversing the trend. So in this case, from a downtrend, it could be reversing to an uptrend. So there's a couple of little signals there given. You can see there it was consolidating around the 61% for some time, and it's made a little advancement above that descending line in the last 24 hours. So I'll keep an eye on that. Also on the daily, you'll notice I did draw this bullish divergence on the CCI versus a bearish divergence in the price chart. That's still in play. So what we possibly may see it is if we continue that, if I draw another extension of that from that level down to there, you can see there that still plays out. So if that breaks to the upside and it keeps going up, then this is going to start moving in our favor for a potential, you can actually place a trade on this possibly. I prefer not to trade it, but I look at it primarily as a trend reversal. So if it breaks above this trend line, which also aligns with this diagonal as well, it may be, as I said, a break of the downtrend. And the way you would look at that is, let me just get rid of this little Fibonacci. We draw another Fibonacci range between the lowest part of that divergence and probably going to the highest part there. You could actually go higher, but that's probably the highest one in the short-term range we need to look at. So the initial target area, it's already hitting this 50% level. So the initial next target area would be this range between the 61% and the 78% Fibonacci from that Fibonacci range. So that's where we're looking at the moment for a potential trend reversal. So obviously it could continue to the downside, both price and CCI, in which case it'll probably invalidate this divergence. Also looking at the hourly chart, we also, if I zoom out, I've got these two back tests, a long back test and a short positioning back test. And again, primarily when the price goes in a more bullish momentum, that's where you take profits using the long approach, the long trading strategy. And when it falls off, you'll see there going long, the profitability it takes effect on is hit by your drawdown. So to avoid happening that, and this is obviously the reverse, taking short positions, so you would have avoided going short during that period. And you can see there the short program would have worked in that area where the price declined. You can see there the profitability. So the way to avoid going short in this area and only going long, and vice versa when it goes short, you want to make sure primarily, you can see there during that period from the start of 22, you would have gone primarily long, based on the weekly trend indicator down here. If I zoom out here on the daily, likewise there were primarily long trades with a couple of small short trades during that same period. So basically what I'm saying is you want to make sure the weekly and the daily are aligned. You would have taken long trades and you would have been profitable. Likewise, in more recent area, when the weekly and the daily are showing short positions, you take short trades only, and that's where that would have been more profitable as well. So to understand how to trade using the average down approach, reference the links in the description below. Subscribe to my Patreon page, where we also do stocks scans and currency and commodity scans. Subscribe, like, and share the channel. Thanks for watching, and see you in a future video.